JB here. Hope everyone's doing on Sunday, Monday, July 21st, 9:06 a.m. Talk really quick about the market. Some names I'm looking at go from there. S&P futures off the highs of the pre-market, but still slightly in the green here, about up a tenth of percent. Nasdaq's kind of flat. Interesting week, right? So on the heels of last week's bumpy ride, I wouldn't say it was too bumpy, but all-time high close. I think the Nasdaq's now five sessions in a row, close in there. Uh, but we had the shenanigans on Wednesday with the Powell news that he was going to get fired by Trump, and then we recouped those gains. And then we got through all the hurdles, right? The inflation data, and now this week there's not much in the way of catalyst outside of earnings, right? So uh, will be interesting to see how this week plays out. I mean, last week you still have people going over the CPI data, and yes, it increased on a month-over-month base, right? So inflation creeped up, and then there's articles, people spinning it, right? And it depends on whether you agree with the current administration or you don't. Pretty much how the articles spin. So folks who agree with the administration think, oh, there was a piece in the Wall Street Journal this morning uh, about how what did I post in the room? I think I did that. The economy is regaining its swagger, right? And then um, I think they had posted an article after the CPI data saying inflation is accelerating or something like that. So it all depends on what goggles are being put on look at the data, right? If you have bullish, I wouldn't even say bullish goggles. For me, I say, at some point inflation is going to show up, right? I mean, it's just unless everybody, um, whether the exporter, if the exporter takes 100% of the tariffs or the importer takes 100% of the tariffs, right? I mean, that's the only solution. You have to think that's not going to be the case, right? So you just hope it's not enough to derail the market. Uh, but and not only that, then we have to start looking at some other. Anyway, so that's kind of that. This week is all about earnings. Google, Tesla, Intel, um, a lot of other names reporting too. I think there's 391 companies reporting somewhere in there. I put on a watch list, and then some of the things you read, a lot of the niche companies are going to be the ones you kind of have to look at too, right? The Mattels, the Hasbros. Um, I think Coke reports tomorrow morning. People will be looking for just sliver, trying to parse the earnings to find out how tariffs might be impacting them, right? And last earnings it was all about uh, the word tariffs, right? And I manageable. I forget what the buzzwords that folks were using. Um, and now it's just going to be how the impacts, right? So also this morning, what you had Stellantis, you have uh, the auto manufacturer posting its back-to-back quarter of loss, and big. I think it was 390 million. Say this is just the start of it. They think they're going to forecast up to a billion loss because of the tariffs. So there's obviously going to be some impacts, and then it's whether that company takes the hit or pass it on to the consumer. If they don't pass it on to the consumer, inflation is not going to go up, right? So we're still down that road of every month it's going to be when the tariff numbers pop up, but hopefully if they get to a point where people can realize, hey, maybe it's not going to be as bad. I hope that's me, glass half full, optimistic view. We hope don't get there, right? All right, so I have this little chart here. This came from Ryan Dietrich always posts good stuff. I don't think he made this, but this is something he retweeted. But this just shows this week, right? So the S&P is over its 20-day moving average for 59 consecutive days. The 9 other occurrences not good for markets for this week, right? So on average, pretty much 8 of the 9 times, 3 days later, the market's down 1%. 4 days later, pretty much a 78% probability of the markets being down 1%. And then you go further out and then things kind of normalize. So definitely a moving average. It's not 20 days, not my indicator, right? I like the 50 and the 200-day moving. 50 for more short term, 200 for a little longer term. Uh, so I don't know how much to read into. I guess we're going to find out if occurrence number 10 plays out just like the other or most of the other occurrences, but something of note. All right, so that's kind of overall markets. And take a look at the S&P, the SPY, talked about 517 to 528. We pretty much closed 527.58. We got up to 528 a couple times. Then on the flip side, that Wednesday with the shenanigans with Powell, we got all the way down to excuse me, I'm saying 6. We got down to 618. I'm probably going to put a support resistance line around 621. That seems to be an area that we've hit over the last 2 or 3 weeks. And then, we'll see how things play out here today? 636 to 621, somewhere in there. I think that's what it or so that's kind of the oval chart. And then this week is not per se a vacuum of catalysts. I mean, earnings, obviously, it's like earnings are encompass CPI data, right? Because we're going to get uh, guidance and we're going to get numbers that reflect the previous quarter. So should be an interesting week, but also we have the trade deal, the backdrop of that. Supposedly there's going to be an executive order that's going to appoint some kind of AI czar. So we'll see how that plays out. All right, so that's overall markets. Yields dipped on Friday. The dollar strengthened. Today, the dollar's down. Yields are still down, so hopefully the dollar can find some footing. And then the amount of stock trading over there, 200-day moving average on the S&P ticked up. Actually, it was flat as a pancake on Friday, so 60%. So still some room. Again, if you're optimistic, right? If you're not optimistic, you look at that and say, "Wow, breadth is not catching up. Stocks aren't." This is the 200-day moving average. I don't know if I have the chart. So if you look at the watch list, I post most of the stuff in the watch list so you can follow. All right. So that's overall marks. All right. So now just individual names. So I did add one position on Friday that was getting those lemonade strikes. So lemonade report August 5th. So in lieu of trying to get some strikes that are expensive to encompass earnings, I was watching the move on Friday, and also Travelers reported last week. It was great earnings and the stock rallied. So it kind of like removes some risk with the insurance sector as a whole. So I think that takes some of the risk away from Lemonade. And then you take a look at the chart, and Lemonade is a name that once it rallies, and rallied all the way up to 46 mid-June, and it's kind of been holding there, right? It's holding right around that 40 handle, started to bounce towards the end of last week. I think there's an opportunity for another move to the upside. So the 45s look inexpensive on a risk reward basis relative to the previous times I've looked at strikes where to get a call that was less than 10% on money on Lemonade with a week left to expiration was pretty good, right? And not only that, it's past history of its moves that once it gets going, the 45 strikes going to look a couple bags at least, if not more. So that was the thought process there. We'll see how it trades here this morning. If it gaps and runs at the open, I'm going to look to close some out to cover costs. I'll ride the rest, and then if I can get some more out, I'll look to add some strikes to encompass earnings. So that was the thought process there on Lemonade. JOBY, I mean, I'm not going to talk too much about what a monster last week. Closed up 47%. It's up 12 sessions in a row. If you take out the previous Friday's red session, it was going for 7 in a row. It's most green sessions in a row all time, but it closed in a red that Friday, and then boom, off to the races. Still love the story. It just, you look at it, and the further it goes, the higher it goes, the probability of some kind of major pull increases. And not only that, it's like it could be 25 this week or it could be 15, and neither would surprise me. And not that I'm hoping for a pullback, but if it does find some pressure, 14.95, that's kind of like the big spot. That's the gap fill. So I locked the rest of the August strikes in. I'll just continue to hold the Octobers, and then at some point, if it holds its ground here today, maybe I'll be open to getting some more strikes, maybe closer ones. If not, I'll just be patient on JOBY. What a monster that has been. And then SERV Robotics. So, ironically enough, I keep saying that FOMO at some point is going to come into SERV. And when I was talking about JOBY over the last couple of months, I'm like, one of these days, one of these weeks, one of these months, that sector as a whole is going to just go on a tear. And that's happened. You see Archer Aviation still hasn't caught up, and some of that I think has to do with dilution. But same with SERV Robotics. And sure enough, what happens this morning, Wall Street Journal out this morning at 5 a.m. with an article on robotics, robotic food delivery, right? The robots that are taking over your food delivery, technology removing humans in an effort to make restaurant delivery faster and better. I don't know if the author didn't really have a chance to reach out to SERV Robotics or didn't want to, but pretty much the article was more about some other companies that they got quotes from. But to me, it's just bullish the sector. It means people are, if they haven't been, they're going to start to become aware of other opportunities in the space, and then they look and say, "Wow, I missed out on Uber." Probably remember seeing Uber articles or someone getting an Uber and like, what the heck is that? Until you finally realize, and by the time you do, then you may be possibly too late. At some point, server's going to catch fire. Just I keep saying it was $18 back in February after the news Nvidia stake. They liquidated the stake, caused a lot of the pressure there. But now it's been kind of like consolidating since its lows from April, and then at some point it's going to take off 13.75, then all the way back up to 18. Not only is it's like a growth story in early stage, but it's still like on the cusp of generating major revenues, considering its market capitalization. So just on that basis alone, I think it deserves a higher multiple. As no debt, plenty of cash, big backers. Uh, so in that article, they talk about the drones, right? So when you get deliveries, typically Serve Robotics or some of these little robots, they are just doing the last mile, last couple miles of delivery, right? But what about those folks 8 miles away or kind of intermediate delivery range? Well, they have drones, right? And so Serve as a partnership with Wing, I think it's Wing Aviation or something like that, that does that last couple miles of delivery for food. So Serve drops those delivers to that drone. Uh, I don't know, if it's the warehouse or whatever, and then that drone takes the delivery and brings it to the last step of the delivery. So, I mean, if you start looking at the future, that could be some of the future as well. So, there's addressable markets that are not even, I don't think, baked in to the stock. But anyway, love Serve. Not gonna, I'll probably, I still have August strikes that I want to lock in, and then I'll continue to look for other strikes. I have the September calls as well, and then if it finds, maybe if it gets back over 1250 or so, I'll look to get some more strikes. But love Serve. VKTX reports earnings on Wednesday after the close. Nice run last week. It has like a 17% implied move, and despite the move last week, my August strikes continue to go the wrong directions. I had already locked some of those in, so I cover some of the cost. In lieu of trying to add some more strikes into earnings, I'll continue to sit on my hands. I would say 90% probability there's going to be no data at earnings. Typically, a company doesn't release data in conjunction with earnings, but they will release an update on their studies, right? So the risk would be that if they issue an update on the phase 2 oral GLP-1 data that's supposed to come out and say, oh, it's not going to come out till September, the stock might be pressured a little bit. So, and not only that, my August calls will be up in the toilet. So I'll probably just wait for earnings. They can also, have some more updates on some other studies and things that might be a catalyst. I don't like the risk. I mean, I think that I'm positive the outcome for the company. I'm not convicted enough that they would not issue some kind of release that might hurt later dated premiums if they say, hey, data's not coming out until September, October. So that's the risk. So I'll just continue to hold those strikes when I'm bullish the name. Uh, and then just some other names. Google's reporting earnings this week. So with Google, it's going to be all about how AI and AI search in conjunction with all that is going to impact its business, or how it has. How are they able to pivot, right? Uh, so if you take a look at all the commentary and sentiment on Google, seems somewhat negative, right? And then you have that read through on some of these other names that are possibly impacted by search and AI. It's like a name like Reddit. So continue to look for opportunities to trade Reddit. You take a look at that bull flag I drew 2 weeks ago. It looks like it might be breaking out here. So if that happens, it's going 175 plus. It could be a nice sympathy trade into Google earnings, right? Because if there's a nice beat and raise from Google, and Google kind of like still says, hey, we're still funneling lots of traffic to these other sites, I think that bodes well. So don't be surprised I have more Reddit. And I did talk about, yeah. Oh, well, I do at the end here. MDB, disappointing, right? Closed green the last 4 sessions of the week, and my calls just couldn't come out for pay dirt. At the open on Friday, they were actually in the green, and I just held on to them. I'll continue to look for opportunities to play MDB as well. I still think it trades north of its earnings high, 230. Dell disappointing on Friday as well. I got those strikes after the Bank of America and Goldman Sachs analyst upgrades. Stock was at like 127. It got up to 129. It stalled for like 20 minutes on a Friday. Stalling and premiums do not mix, right? They don't go together. So I closed those out, and sure enough, 30 minutes later, it just got some buying pressure. Boom, 130, then all the way up to 132. My calls would have been like 800%, but that happens. It'll happen again. It's happened before, right? It's just part of the trading game. So I'll continue to look for opportunities to trade Dell. I think it trades north of 135. That's its gap fill as well. They have earnings, I think it's at the end of August. Similar, MDB, I think will be at the end of August, September. So another name I look for earnings premium build possibly. And then last but not least, these small cap bios. I keep talking about them, and the more I keep talking about them, but I haven't got in them. And sure enough, a name like Turn, when I was talking about, it was like in the fours. Now it's up near almost $6. At some point, I might add them. Corbis, Turn, Edit. Those are the names I'm looking at. Anyway, let's have a great day, folks. I'll be back on a little later. Rock and roll.